Hi everybody, this is Breeding of Insanity Industries, and today I have a special guest. It's Brookmyre, who did the wonderful intro and outro music for the videos we've got here. How you going, Brooke?
Good, mate. How are you?
I'm doing fantastically. Now I've got Brookmyre in today to talk about how he gets direction in trades using a series of opens to decide how he's going to get into a trade and where he's going from there. Because I know a lot of guys out there are struggling with direction, and I figured I'd get a guy who knows what he's doing in to talk about it. Take it away.
All right. The chart that I'm showing here is it's a 1 hour master chart that I'm using. It has 1 hour candles on it with a 4 hour overlay. That's the green and pink rectangles, and then it has some lines showing the monthly, weekly, and daily opens. Pink ones are daily. So the idea is fairly simple. If you're above the opens, you go long, and if you're below the opens, you go short. That's as complicated as the biasing idea gets. So it's about waiting for the time frames to align before getting into a trade. So, for example, right here, we have an hourly candle. It refuses to close back over, traces, and at that point, I would be getting in long. That's the daily move for 134 pips there. When I'm doing this, I'm putting the stop at the low of the current daily candle, because if price comes down and tags that or starts closing lower, your entry idea and direction have been invalidated. So there's no point putting it any further away and losing any more money. But to complement the idea, what I'm doing is, as you get these up and down movements of the H4 candles, I'm looking for a close over in the same time frame. So for example here, you're getting a close over on the H4 candle here, and above that is where I'm looking for a long trade. So I'm looking for price to be above that line and with the daily, monthly, weekly, and that hourly candle that I just showed you within that, the 4 hourly move conforms to that idea. And that's what you want to see. Price conforming to the idea that you've got in your head of what should be happening, and when it doesn't, getting the hell out. So you can see, very simple idea. Price comes up for this particular day, 135 pips, even if you were getting out at the close of the day, 111. Oops. So same idea here. If you were simply waiting for price to close over, the open, closing higher than that up and down movement, there's your candle right there. That little candle there, above that is the long. The low of the day is just over 20 pips away, and the daily move right up to the top of it is 101 pips. Back to the close, 68. But it holds on for the month. So the idea is price breaks out, comes back, it tags these areas, that line or that open, and continues on. Price breaks out, comes back, tags the open, continues on. So you can see it's a very simple idea. At this point, you're only looking to trade long because you're above the monthly. Now you can do some counter trend trades, but I would only trade against the monthly direction. If you have daily, weekly bias in your favour, so for example, that's the weekly, the daily. If price was down here, you might start looking for shorts. For example, there's the close. You would be looking for price to close over before taking a short.
And that never really happens, does it?
Never happens. Doesn't quite get there, even if you are looking at that H1 candle to go short from there, because I wouldn't take anything other than an hourly close over those lines to as a get in early. it doesn't close any lower than that. So the idea is the price closes over that, and then below that close is the short, so it doesn't do it there. In fact, that it turns around right on that point and rockets up for 160 pips. So just staying out of the counter trend trade is what I try to do. Stay above the 3 time frames. When you get the signal on this master chart, then you have the H1, H4, D1, week 1 and monthly charts all heading in the same directions, and that's what has to happen before price makes those bigger moves. So you're not necessarily getting in at the lowest risk supply and demand areas, but you're taking the meat out of the move, and that seems to suit me a lot better. I'll give you an example of the trade I took yesterday. Right, so this is that highest close, price retraces from it, does the same thing over and over again, closes over that same up and down pattern. You get the close over here, but you are above the weekly and below the daily, so you are filtered out of the trade until it closes higher. Finally, that 4-hour closes right on the open of the following day, and at that point there where you've got that H1 close over, you're long above that line, and that's where I ended yesterday. And out of that move yesterday, which went for 104 odd pips, I took about 70 out of that, 72 out of that. Today, currently in a trade, same principle again, price closes over this with the bias of the 3 larger time frames, and I got the 1-hour close, refuses to close back over, price takes off. I'm looking to get out about there for, it's about 65 pips, I think that one is, for a risk of about 12 I think, 16. So that's the low of the day there. I've put my stop just below it. If price comes down here, it's below the low of the day, it's below this line, your idea is invalidated. Your direction, for the time being, is invalidated too. This being a big up month, and that's the high of the year, price could well turn around and rocket down. So it wouldn't be unreasonable to think in the last couple of weeks of the year it might make a move in the opposite direction.
That is absolutely fantastic, Brookmyre. Now that I had something right on the tip of my brain and it completely went away. That's right. So you've got a set of indicators to show these overlays and those averaging candles and so forth. Would you mind letting us know what they are?
There we go. Okay. That's there's only 5 or 6 of them there. They're all, none of these are predictive indicators. They're simply helping you look at the chart in a slightly different way. Tro opens is the one that puts these lines on the chart. M candle period lines puts the overlays on. I've got that set to 4 hours. Perfect opens just removes the gaps. These lines here are actually, close that for a second. There's your regular candles. So when you set that up, all it does, it takes the gaps between the open and close of some of these candles out by having the new candle open at the last one's close. It just makes it a little neater on the chart, and for me, I'm trading off a laptop, so 15-inch screen allows me to get way more data on there. I can look back much further by using that. Tro multimeter, that's that there. It shows me at a glance where all the candles are, whether above or below the open. II spread, one of my favourite indies, right there.
He's sucking up to me now.
Yeah, so there we go. I love this thing. Just shows you what the spread is on the actual bid-ask line, and that is the countdown clock right there. So all of those are free indicators. You can find them all over the place if you search the interwebs.
I think most of those will be findable either on Creslic, and obviously the II spread can be found at insanitindustries.net. Now, Brookmyre, you've shown us a fantastic long. Now, obviously, this doesn't always work out. So, if you can show us, for example, trying to take a short and then it not working for you.
Okay, in this is the same month on the US Canadian dollar. If I was looking to take the short, let me just remove those out of the way. So you're looking for it to be below the weekly, monthly line, monthly open, and the daily. So for example, there would be a perfectly reasonable setup. You've got price closing over, there's the close, you're looking to short below that, but unfortunately over here you've got previous weekly open, and essentially price moves between these lines. It goes from here to here and back, bouncing about, and you'll find that without the room to take that trade, there's a little point. Carries on a little bit further. Let me see. This one here, down and up. Price closes over, is short below this line here, and you can see price never triggered it further. If, for example, you were in there, down, up, price closes over, and that happens to be on the right on the open of that day, so it's flipping over, closes here, below that is the short, which you could take for about 28 pips, but again, you're hitting this line here, and just missing that one there. So it's just stopping, it's not going down any further. That's a fairly big swing low over several days. It's a period of demand that you are not going to be able to overcome. Price moves back across the opens and starts moving in the long direction. So you could have been in for a couple of goes, made a couple of little pips, maybe had a couple of small losses before settling on a direction for the month, but it would have been very small losses before trying to get the actual direction. Some weeks the daily candles will just cross back and forward over this line, just to stay out of the churn, market high, market low, and wait for it to move in a direction convincingly.
Fantastic, and it's always good on methods like this to see that the method also keeps you out of trouble, and I'm liking what I see here. So thank you very much, Brookmyre, for coming in and sharing this with us.
My pleasure, mate.
No worries. Well, this has been Breeden and Brookmyre for Insanity Industries, helping you make more money by sucking less.